Hey guys, Don Durrett, Gold Stock Data. Time for your video of the week. So I'm working down the list, adding videos to each of the stocks in the model portfolio. So today we're doing Barton Gold and B2 Gold. Before I start that, I wanted to show you my Substack. On my Substack, always make sure that you see the blue check. So if you see my name, look for a blue check next to it. A lot of people, scammers, if you will. Um, on my home, on my profile, it has these are the three subscriptions that I offer. So website, Gold Stock Data, that's the main one, and then Substack, and then Seeking Alpha, which is the one that I do the stock of the week videos for every week. So I just wanted to show you those three. And the Seeking Alpha is really for high net worth. It's more of an add-on. Gold Stock is the main one. Substack is $8 a month, or you can do it for free, or you can pay for a year. The benefit of Substack, which is just a blog, is you'll get notified of anything I post there. Most of the stuff I post there is also posted in the Gold Stock Data Forum, and then Seeking Alpha. So if I show you my Substack, this is my Substack. I if, I do a weekly podcast, and then you'll get a notification. If you pay to this, you'll get a notification. I also put the notification for the weekly Saturday night podcast in the GSD forum. And I wanted to show you this post that I did this week, which I gave away for free. So if they don't have a lock on them, then they're free. So a lot of them are free. Like the Friday recaps are sent out, and if you join for free, you would have got an email about this concentrated strategy. So you definitely recommend you do it the free if you don't want to do the monthly or the yearly, because you'll get notified a lot. Like if I do a YouTube video or if I do an article like this, you'll get a notification. So this concentrated strategy, um, I don't use it, but I was coaching somebody and they were using a concentrated strategy, so I decided to write it up, kind of how to do a concentrated strategy. So if you're going to use, say, 30 stocks or less, then you want to read this article. It's very short. And then I actually have three different um, teams, if you will, stocks that you basically have your starters and your reserves. So these are the stocks, 18 stocks. If for uh, basically this is kind of a low risk three bagger. So these are the high quality companies, and then I have kind of a moderate, and then I have more high risk at the bottom, 10 baggers. So I give three teams. So again, this is open. This one is free, open to the public, but I wanted to show you that. So now we can, um, I guess before we go to Barton Gold, I wanted to show you. So this is the Seeking Alpha model portfolio. So it has this add remove notes, and so this you can kind of follow people that sign up for this. Again, it's mainly for kind of high net worth that can afford an extra subscription. Um, that you can kind of follow me. Um, I'm I'm probably going to sell this whole thing out as that we go to the top. So the add remove notes, I'll we're gonna as I sell these, you'll be able to follow me, people. But it has a few other portfolios, income stocks, the Mormons, the Aussie 8, top silver, top gold. So it has some extra portfolios. The model portfolio is the main one. And we're trying to um, give a little extra with these links to write-ups or videos. It's kind of um, something extra. I created this for Seeking Alpha model because they offered it to me. I was going to walk away. I wasn't going to use Seeking Alpha, and they said, "Well, if you want to create an investing group," and it was free, so I said, "Okay, why not do it?" So that's where this came from. This Seeking Alpha investment group. So the first one we're going to do today, we're going to do Barton Gold. Barton, it's not, a super exciting company per se because they don't have big assets. But I do have it as a top pick. I do see it as um, kind of I think it will be well, will's a big word. I think it has a good risk reward for being a five bagger. I don't know if it'll be much better than that. It's 159 million. I like the CEO. He's doing a really good job advancing these projects. We're looking at 27, so we're getting closer, a little over a year out from production. They might be able to begin production here in 26, but it's looking like maybe 27. Balance sheet isn't great. 4 million, no debt. For an Aussie, they don't have a lot of dilution. Insiders 50%, so that's one of the reasons I like it. I don't think they're going to sell. But here's the problem. They only have 2 million ounces of gold. So it's kind of that's kind of a minimum for me, 152. But for a mid-tier producer, that's not enough gold. So it's kind of a borderline. But they have a lot of exploration potential. So maybe they can get to 3 million, but it's currently printed as a 10 bagger, which is, pretty strong. And it's in Australia. It's in South Australia. Um, I see them generating a lot of free cash flow. So the upside's there, the location's there. The red flag is potential short mine life, depending. But their flagship, what they're going to build second, has 1.5 million ounces, zero point 0.9 open pit. That should be a 10-year plus mine life, so it's not really short, but they don't have large resources. Um, so they want to start out they have one mine that has a mill on it. And so they want to start there and then kind of a small project. And then they want to go for their flagship, which is Tunkila. And then Tarcoola and Tolmer are their smaller ones that has the mill, and they think it's permitted, and they think they can get into production. Tolmer's been having some really high grade silver that they didn't expect to find, 6 meters at 4,000 grams, but we just don't know how many ounces it is. There's a video here from last year you can watch. Management owns 22%. Um, so I think management is in this for the long haul. I think they want to build both of these mines, generate free cash flow, and take this to $1 billion. Um, yeah, again, it's not, a super exciting project per se, but it's definitely, um, you know, five plus bagger. It's definitely interesting. And the key here, like most of these development projects, is uh, can they grow the company? So this is a November presentation. They do a really good job of marketing this company, which I like. Some companies do a better job than others on marketing. They do a very good job. So they're showing a little over 2 million ounces. So we need to get them to get to 3. They do have a lot of land. which is good, exploration potential. Both their properties are a lot of hectares, potential. So Tunkelia, which is their flagship, they're trying to get to 120,000, which is, that could be a $2 billion company. And they're talking about, they want to, so they have this mill, this Gawler mill. That's where they're going to start with Tarcoola, Tolmer, and then Tunkelia goes next. And they have another property they bought, Woodina. Um, Cash, 20 million. I was only showing five. So that's outstanding. I think, how did they raise that? They had to raise that recently, but yeah, 20 million cash. That's fantastic. So 238, 16, and 20. 238, 254, and up to 20. So they're financially in good shape right now. See what their market cap jumped to? They're at 167 and they're still printing as a 10 bagger. Um, they've done a good job. They haven't diluted us into the ground. Here's our insiders. So we got the board at 21%. We got high net worth at 17. So combined, good 30% insiders. This is Alex Scanlon, the CEO. So you can see these large properties that they have. So definitely some potential. I could be underestimating their upside. I'm looking at 5 to 10 bagger, but 120,000 ounce producer. We'll run the tool on it. They got stage three, this Woodina, 280,000. Could add more. Here's their Gawler mill. They're gonna have to build another mill for Tunkelia. So it's kind of a long wait. One of the red flags on this is it's not around the corner. We're probably looking 3 years out. So here we are. We're currently stage one, 26, 27. I got a DFS underway. So 20 meters at 26, 21, 22 at point 0.6. Those are pretty good drill holes. It's only 50 meters, 200 meters. So this is their open pit they want to start with. Then this is Tunkelia, which is their larger one, 120,000 ounces. Um, Tunkelia definitely looks like a pretty strong project. And we got one Dyna, which is this is I'm not telling us how many hectares, but it's a pretty big chunk of land. And here's their starter. This is where the Tolmer, this is where they found the silver they didn't expect to find. So this is where they're drilling out Tolmer right now. And the thing that was strange about it was close to the surface. I mean, it was very, very high grade close to the surface, which you generally don't see. Where's this massive hole? Here we go. 4 meters at 1400. Here we go, right here. 6 meters at 4,000 from 46 meters. So it's only 46 meters down. That's very shallow for finding this very high grade silver, which they didn't expect to find. So they're trying to understand where's the silver, where's it coming from? We could get some good, unexpected good news there. So here we have this Gawler mill, which they want to turn on, possibly commissioning maybe in late 26, probably early 27. And then we got Tunkelia. Um, I'm not talking about permitting here. They're fully permitted at Tarcoola, but I don't think they are at Tunkelia. So as you can see, it's not, uber exciting, but they definitely have something. Um, Mining lease application. So this is the permitting for Tunkelia. So it doesn't tell you we don't really have a timeline for Tunkelia, but it's probably 28, 29. But they're making progress. It's got exploration potential. Um, we got the Tomer silver. We got the high insiders. It's got a lot of positives. So, but not, uber exciting. But we can throw the tool on it. We can take a look. So here we have 125. That's only for Tunkelia. So we could maybe Tarcoola or Wadina could add to that. But if we just do Tunkelia only and we go to 6,000, take the cost up to 2,500, and we take this to 15, and we take the dilution, say to go to 350. Probably this is going to be over a 10 bagger. So it's showing a 25 bagger. So if we take the dilution up a little higher than that, take it to 450, um, and run it, we're still at a 20 bagger. And this is 125, which is only Tunkelia. So, and they got a lot of exploration potential. So I said it wasn't exciting, but it actually is. It's got some serious leverage here, but it's not going to happen overnight. We're looking, a good 3 years out, maybe 4 years out. But I think this dilution, 454 and 15 multiple, I think that's definitely doable. 125 is doable. 6,000 is doable. That's my expectation. We go 5,500. We're still going to be 15 bagger, I think. We get a 17 bagger at 5,500. Take the $2,700 cost. We're going to still get a 15 bagger. So I think this thing does have 15 bagger potential. I'm actually going to pump this up a little bit. I'm going to go down here, move this to 6, at least a 6. Um, do a refresh on this, take it down, take a look at it. So it moved it to a 12 bagger, with I think is a little bit better number. Um, I do think we're heading to $5,500 gold or higher. So Barton looks a little better than kind of I anticipated. Looks pretty solid. The next one we're going to look at is B2. I like B2. I always liked it, but never owned it because it never was really cheap enough. For majors, I only like to buy majors when they're at least a 5 bagger, and historically B2 wasn't. But then They started having that military junta in Mali where they have their largest mine. The Fakula mine right now is half their production, 500,000 ounces. So Fakula is really kind of the heart of the company, and it is because of the issues in Mali, they're basically not getting valued. So they have a $5 billion market cap. They're a million ounce producer. Their balance sheet is cleaning up quickly. They have 460 in debt, 360 in cash, but they're generating a lot of free cash flow right now. Um, so they're a million ounce producer. I have their about a $1,500 ASIC, so 2250 break even, $1,800 margins at 4,000. So 1,800 and a million. That's a lot of free cash flow. Again, they're I have them at 1.8 billion free cash flow at current run rates. That's a multiple of three. I think this thing's going to go double digits. So we're looking at, I think it's going to go to 10. That would be 3x expansion. So just on the multiple alone, it doubles to six, doubles to nine. That means the share price would double and double again. As a three bagger, only on multiple expansion alone, um, which is fantastic. So it's currently printing as a seven bagger. This is at $5,000 gold. That's with a little bit of growth of 1.2. Um, Tons of free cash flow. Even if you took away Fekola and it was a 500,000 ounce producer, it would still be worth more than 5 billion. So we're kind of getting Fekola for free here, which is kind of crazy considering this is a growth story. I mean, if we look at the pipeline of projects that they have, this Grimulti, this is the one that they're building in Colombia right now, under construction, I believe, in production in 2028. And they have another project in Namibia, which I like Namibia a lot. So that's 265,000 ounces they're going to add in 3 years. Plus, this Lapland project's probably another mine, and then Hackett River, they have a 22% NSR, which nobody's going to build this mine. So it has 190,000 ounces of silver. Whoever wants to build this, I forget, it's a company in Australia that owns it. But this is in Nunavut where these guys now are experts because the Sabina project, they're basically ramping it up right now. So they're the perfect team to build it. It's not easy to build mines in Nunavut. I think they're going to end up doing like a 50% JV for this, and that's 5 million ounces a year of silver. And if maybe they buy the whole thing. Um, and then we have another one, this George project's 1.5 million ounces, 8 grams per ton gold, which is 30 miles away from the Goose Mill. Then we have another mine in Mali, 2 million ounces. They own 10% of Snowline. They own 5% of Founders. We get all of this for free. So yeah, give me that. I'll take that risk in Mali. And now if we run the tool on this, they're currently a two, and I basically said we're gonna go to a 12, but we'll back it off to a 10. There's the growth, and we're at $5,000 gold. I'm gonna bump this to $5,500 gold, and we'll take the cost up to 2,400, and we'll dilution wise, we'll add a little bit. Um, I'll take it to 1.5, and we'll go ahead and run this. And it prints as 500%, which isn't great. I mean, I'm showing it, better than that. The cost at 2,400. This would be an ASIC of around 1,700, so it's probably a little too high. We'll take it down 2,200 or 2,300. See, we'll probably take it. This gets to us. No, it stayed about five bagger. Now we'll take this up to $6,000 gold. About six and a half bagger. So we're currently okay. So yeah, so $6,000 gold, a little, 10% growth, and I showed you a lot. There's a there long term, this thing could easily get to 1.5. Um, so it could go do better. So if we take it to give them a little bit more growth, things get wacky. They get a 12 multiple. We'll take this to 2,400, more long term. Um, Potentially a nine bagger there. Um, so, it's not super juicy, but it's cheap for the quality. I think, I think I do expect us to get to 6,000 gold. I don't know how fast they'll get to 1.4. Maybe they don't get there. Maybe we don't get a nine bagger. This is a major. Um, but even if we get, say, 1.3, we still get an eight bagger, which is really good. So, and a lot of this is, that Facoli project, which is 500,000. So when they grow production, as they grow production, Fecola becomes less of an issue. And as Fecola becomes less an issue, their multiple can expand. So I think on the whole, I think B2, I really like their pipeline. Their pipeline is just loaded. Um, 1, 2, 1, 3, 1, 4. They definitely can get there. They could conceivably even get to 1.5 with their pipeline. Although it's not going to happen overnight. They could also do an acquisition. Um, but if I can find a quality producer that has five bagger upside, um, I'm I'm probably going to buy it. But ideally, I want to get like an eight bagger, which is very possible. This shows you where their properties are. I, I, I thought that mass bait mine. We'll have to take a look at that one. But I'm okay with Namibia. This is actually fairly safe. Mali's not great. Finland's good. And then we over here, and we got Colombia, which I'm okay with that. It all depends on the location. Um, but on the whole, so this year we're a million, but we're ramping up. We're ramping up production at Goose. So Goose is smaller. Goose is going to be bigger next year. So you got Fecola at half of the production. This also has the A6. So A6 at 1,500. Um, I don't know. They're not giving us guidance if ASIC's going to drop or not. Focus on organic growth, investing in junior companies, looking for more growth. So they're a shark. They want to grow the company. Um, they actually could get taken out. They don't have very many insiders. I mean, if somebody wanted to go after them, but I don't think anybody will because of Fecola. So Fecola is actually kind of a poison pill, right? And no one's going to take them out with that Fecola because they could lose that mine. So that's great. So you can see their balance sheet. I think their balance sheet is going to improve a lot next year. I think they'll pay off their debt next year. It's my expectation. So they're mining about 250,000 ounces last quarter. That takes them to 1 million ounces a year. $1,500. That's a good slide. Um, Showing Fecola at 53% here. Masbate at 20. Goose at 7. But Goose is going to double production next year. You're seeing here they're showing 70,000 ounces for this year, 25. So it's going to double next year. Um, they're showing Goose ramping up to 300,000 here. Wow, next year. Whoa. They're showing Goose at 300 next year. Um, this is their pipeline that I said was so nice. So they're actually expecting Fecola to add production, Grimulti. Look at that, 227 for Gramolo. 227 the first 5 years. Um, but this is the only place they're really giving guidance. I like I was showing you 1.3, 1.4, 1.5. So they're showing adding 750,000 ounces in new production over the next 5 years, and they're currently at one. So it looks like I was being a little too conservative. Um, this, so here we have, yeah, the grade's outstanding. They did a really good job building this mine. No cost overruns, which is amazing in that part of the world, that kind of cold. So we had first pour Q2 of last year. George, 50 miles, 50 kilometers away. Um, you can see all these drill targets that they have, quite a few. The grade is outstanding, 6.8. I think they're going to add George. I wish they would give us some guidance for 26, 27, but they're not. 28, that would be really useful. I like the exploration potential at Goose. They're going to find a bunch of gold. Here's Fecola, 500,000 ounce per monster. It's on the border. That might be a good thing. Out of the way. They're adding, um, they're finding more gold in the Fecola complex, which is they're trying to add more production there. Adds risk, absolutely adds risk, but here's Namibia, which I think this is one of the I'm okay with this country, even though it's in South Africa. I think this is the one. Other than West Africa, I think Namibia is probably the safest place to mine. So here we have expansion. Antelope adding 65,000 ounces. Probably will grow. So 29 and 30. So here's one they're actually showing us production. If they're going to add 90,000 ounces in 29, they'll probably find some more gold. Mass Bay. This is a very economic mine. Gramalote. Um, First 5 years, 200,000 ounces. Cash cost 700, ASIC 1,000. This is a very economic mine. We have a year on this. Do we have a production? 13-year mine life. This is a good project. We got a feasibility study this year. Here we go. We got a 2.5 year construction. So we're not going into production on Gramalote till 28. They don't talk about Hackett River, but Hackett River is here's Snowline at 9.9, Founders at 9.9, Omega Minerals 9.9, Prospector, they just took in 20% ownership of Prospector, and then Versamat 33%. So they don't mention Hackett River here. They could do it. do a better job of um, their pipeline showing us their potential growth path for the rest of the decade would have been useful. But on the whole, I mean, it's pretty obvious it's a growth story. And all their growth are economic mines. They're not really uber expensive, big CapEx projects. Gramalote, though, two-year build. It's going to be a while. And I think I'll close it off there. See you guys next week.